Good morning. You're watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day Friday. The country's national debt jumps to a new record high.
Unemployment eases to 5.8% in March.
Uniteam standard bearer Bongbong Marcos maintains his lead in Octa's latest presidential survey, but the research group says some of their respondents are still soft voters.
And PLDT's net income rises by more than 50% in the first quarter. We begin our broadcast with the country's national debt ballooning to almost 12.7 trillion pesos as of the end of March.
Now, that's an over 17% jump from a year ago and an increase of 4.8% in February. The Treasury says the higher debt was primarily due to the ramped-up borrowings from both domestic and external sources. Of the total national debt, 70% were from domestic lenders, while the rest were from foreign sources. Domestic debt stock stood at almost 8.9 trillion pesos as of end March, up by 14% year-on-year. Meanwhile, external debt grew by more than 25% year-on-year.
Now here's another set of newly released economic data courtesy of the Philippine Statistics Authority. Unemployment dropped to 5.8% in March. That's from 6.4% in February. This translates to 2.87 million jobless Filipinos in the month of March, down by almost 300,000 from the 3.13 million unemployed Filipinos in February. Now on the trade front, exports grew by 5.9% in March, beating economists' estimate of 2.1%. However, the March exports growth was lower than the expansion of almost 16% in February. The trade deficit widened to more than $5 billion from about $4.17 billion in February.
Meanwhile, the Bangko Sentral expects inflation to remain elevated in the short term due to volatile global oil and non-oil prices caused by the conflict in Ukraine. Jokno said inflation could settle above the government's 2 to 4% target range this year before decelerating back to the target in 2023. Recall that inflation surged to an annual 4.9% in April, the highest in more than 3 years. The BSP notes that while domestic economic activity has improved, new COVID variants and geopolitical tensions have clouded outlook for global economic growth. Meanwhile, the country's economic team says it's closely monitoring the increase in the country's inflation. The palace vows to work double time to address socioeconomic concerns while taming the prices of goods and commodities.
Now, Ferdinand Marcos Jr. sustained his lead in the pre-election survey conducted by Octa Research in April.
But the research group says survey results are not 100% accurate since some of the respondents are still considered soft voters who could still change their minds on or before the actual polls. Maricel Halili has the report.
Of the 2,400 respondents in Octa Research latest survey, 58% said they will choose Ferdinand Marcos Jr. if the elections were held from April 22 to 25. His numbers were up by 1 percentage point compared to the previous survey. While Vice President Leni Robredo's numbers went up by 3 percentage points to 25%, this is not enough to catch up to the presidential frontrunner. Mayor Isko Moreno, meanwhile, settled at third place with 8%, Senator Manny Pacquiao with 5%, Senator Ping Lacson with 2%, followed by Faisal Mangondato, Norberto Gonzales, and Leody de Guzman. In terms of geography and island group, Marcos Jr. practically clinched Metro Manila, balanced Luzon, Visayas, and Mindanao. Robredo's numbers, on the other hand, increased in balanced Luzon and Mindanao, while Mayor Iskos got his number up in balanced Luzon. Pacquiao got a 0 in NCR and have lower scores in Mindanao. Lacson's numbers remained steady, albeit going down in all island groups. Moreno was not surprised and even congratulated Marcos for remaining as the survey frontrunner.
Wala namang bago. Again, with all honesty, congratulations sa mga nanalo sa survey.
Calyodi says he doesn't even pay attention to these surveys.
Hindi ko siya pinapansin dahil hindi naman ako trapo eh. Hindi naman ako parang politiko na walang importante kundi ang eleksyon.
Octa reminds the public that their survey has a margin of error of 2%. They also said the survey results should not be a basis for the voting public come May 9 and must only be treated as academic information. In an interview with 1PH, Octa research professor Guido David said that 20% of survey respondents were soft voters.
So, kumbaga, pili ko ito, pero baka nag-isipan ko pa, baka palitan ko pa yung pipiliin ko on the day itself. And sometimes, the range is about 20% of yung mga supporters or yung mga pumipili, 20% of their own supporters or their voters, baka pwede pa sila magbago ng isip. So, mga 20% yung soft voters na tinatawag namin.
David also stressed that survey results are not predicatory of election results, but rather a picture of the things to come, with Election Day only 3 days away. For News 5, Maricel Halili, We Are One News.
All right, we're just 3 days away from D-Day, and anxiety levels are at an all-time high as the country determines its fate for the next 6 years. I'm sure economists are just as anxious with so much at stake here. That's including, of course, management of mounting debt and elevated levels of inflation. Now, to find out his thoughts and whether or not he still gets to sleep at night, we have Dan Roses, AVP and Chief Economist of Security Bank. Good morning, Sir Dan. Nakakatulog ka pa?
Morning, Jess and Danny. Nakakatulog pa naman.
Nakakatulog ba? Okay.
Life goes on.
Surveys here, again, like what we've just reported here, not just Octa, but even Pulse Asia, wire to wire, it has always been a Marcos lead here. Question now, has financial markets fully priced in the possibility of a Marcos win? And is that in any way sending jitters, or on the other hand, sparking confidence among investors, especially when we're talking about pandemic recovery?
Well, I think there are scenarios that financial institutions made already in the event of a victory for either of the top two contenders. So, I think at least from the notes that I've been reading and based on our own assessment as well, we think that it's not so much as the personality of who the president will be, but it will really help if the winning candidate is actually more amenable to the markets. But having said that, I think it's, well, as far as the markets are concerned, and as far as investors are concerned, it's going to depend on who the next, or the composition of the next economic team will be. So that's going to be crucial in the months ahead.
Sir, have you been happy, so to speak, with the economic policies of the Duterte administration? And are you happy to continue the type of economic policies that have been in place, especially with continuity? Is that more important to you at this point? Or is there an overhaul?
Are there particular areas that we need to actually change
that we need
in the
to
policies?
Yeah, that's a good question. If it were up to me, I would rather have the current economic team stay on, likely for at least the next year or so, before a proper transition is made. Kasi the tendency for a new administration is actually to replace and back all the cabinet members. This time around, we're in a very different situation. We're coming out of a pandemic. We are in the midst of a war in Europe that is actually threatening to derail growth because of inflation. Also, I think it's really prudent at this time to have those with the experience, especially during the pandemic, of managing the economy, likely just continuing a bit more. But I guess that's asking a lot from them to probably just help the country recover, or at least make sure that the reforms that they have started for post-pandemic recovery remain in place.
Okay, now, of course, the next president, the next administration will be inheriting as well some concerns over the labor force market. We did see the numbers improve, at least when it comes to employment. But at the same time, there are still worries over underemployment. That has remained elevated so far at 15.8%. So far, I know that you did mention it's not so much about the personality, but really about the economic team as well as the direction that the government is going to take. But so far, based from what you've heard from the front runners, are you seeing a clear path here when it comes to the labor force market?
Well, the labor force, I think, is well, apart from the sound economic policies, no. So far, what we've been seeing based on improvements of the numbers, that's all about looser curves. No? That's all about improvement in mobility. So far, we're seeing underemployment still remaining elevated, though, but that's to be expected in a labor market that's starting to recover now. So that's still like some part-time jobs still available before it transitions to full-time job. Because we're still in this pandemic. There's still some uncertainty as regards to where this could all degenerate into, or improve on. So that's the response from the labor market. That's actually to be expected. No? But the total unemployment number improved to 5.8. That's actually very good. That's very near the pre-pandemic average of 5.5% already. No? I guess we can say we're already at that stage. No? We're back to the pre-pandemic stage. Save some further improvements as well. However, there's still a lot to build up on. There are businesses that have closed shop. There are some businesses emerging, offsetting that. No? Some have reverted to some hybrid form. So that's why we're also seeing some. That's why we're also likely seeing some underemployment levels remaining elevated. No? So all in all, I think it's not really. Well, of course, it's going to be aided by future economic policy. But so far, the labor market, that's more responsive to mobility curves.
So resilient pa rin. Sir, let's turn external here and talk about trade. And, is there going to be, or how important is the new president going to be in pushing for external relations with trade? During the Duterte administration, we were generally comfortable with a deficit because he wanted to grow. He wanted this build. Okay lang kung capital imports yung importation. But now, we need to recover the export sector. We need to be paying back all the debt of COVID. And do you see in any of the platforms of any of the candidates this notion?
Well, some of the platforms that I've been reading up on seem to be clear. No? Some are more generalized. However, one thing is clear. Probably we're in the midst of, it's not really, some are calling it the Great Reset. No? So probably there's going to be some redirection of trade, some manufacturing companies closing shop in China and relocating elsewhere, and also some wanting to, especially Europe, no? China's biggest partner, they're trying to review their economic dependence towards China, no? Especially the importance of the ports there. No? So what we've been seeing in those draconian policies that were in China, no, it's affecting global trade, and that's beyond the control of the economies who are trading with them and using the ports. No? So likely there's going to be some shift towards probably a more linear way to do external trade. No? But that's still going to be really dependent on external relations and the trade agreements that we will be agreeing with. So, to answer your question, I think it's very important to be able to renew or to review as well where we stand as regards to trade policies. No? Probably it's high time as well to be able to strengthen those ties with the ASEAN. No? With the Philippines being one of the strongest projected to recover in the ASEAN 5, no? According to IMF. No? So we could likely take that lead and being geographically closer to all those other countries. There's a possibility, that if we are able to band together with our neighbors, that we could get favorable trade agreements with other trading countries.
Sir,
so that's going to be very important.
Yes, sir. Inflation. How worried are you? 4.9% on the last sprint, and of course, the idea that the Fed has already raised 50 bips, but the central bank governor has always been saying that sana our growth would be higher than the inflation, diba? That we don't need to follow in step necessarily so that we don't hurt the consumers' pockets, higher interest rates at the time of recovery. How worried are you that our growth story will not compensate for the increase in prices, especially since these are supply side driven by wars, by things outside of our control?
Okay, let's talk about growth first. The reopening theme that's playing out very well. We saw improved mobility, better PMI numbers as reflected in the labor data and also in the trade data. As such, we're not really anticipating a regression towards a negative path for growth, but rather could be slower than potential of positive growth because of the effects of inflation to consumption. So slower domestic consumption because of inflation and the trade situation may dampen recovery, though it's not going to derail it. No. We're expecting still a positive trajectory for growth this year, of course better than 2021. And talking about inflation, it remains cost push. We saw the usual suspects. We have food, transport, and utility costs driving up faster than expected inflation print, with all signs so far pointing to inflation remaining elevated. Those are actually better solved by fiscal policies. But of course, the nudge should come from the monetary side. So far, likely the latest headline print in April is not yet the peak. We could expect probably higher inflation coming in May or June before tempering down and likely remaining above the 4% area for the balance of the year. So that build up in price pressures will need a preemptive check from the monetary authorities. Of course, we have the Fed actions as well. Those decisive actions by the Fed, which incidentally is also geared towards controlling inflation, should make the BSP and all other central banks think of the timing issue. So probably a rate hike from our central bank could be symbolic, given that it could begin with a small hike only. But that will help assure the market and the general public as well that monetary policy is aware of the situation and is poised to do something about it. So even if we end up at 3/4 by the end of this year, from our current 2%, that's still far from the pre-pandemic policy rate of 4%.
Okay.
So it's still going to be accommodative despite the fact that there's going to be some rate hike.
Okay, so definitely expect more price pressure up ahead, but the good thing is that we're still in a positive trajectory in terms of growth for the year, even better than 2021 perhaps. Thank you very much for your time this morning. Again, AVP and Chief Economist over at Security Bank, Robert Dan Rosas. Thank you, sir.
Thank you.
Now again, we're down to the last 3 days before the elections and the candidates' last 2 days for the campaign. Let's find out where presidential aspirants are headed today. The Lacson-Soto tandem will hold their meeting de avance in Carmona, Cavite this afternoon. Manila Mayor Isko Moreno will be in Bagong Silang, Valenzuela for a regular campaign sortie. Calyodi de Guzman will attend a press conference hosted by the Power for People Coalition at the Quezon City Memorial Circle. This as power consumers cry foul over the 7.8 billion peso Meralco refund order from the ERC. Senator Manny Pacquiao will be meeting his supporters in Cebu, while Vice President Leni Robredo will be holding rallies in Albay and Sorsogon and a meeting de avance in her hometown of Naga City. Pre-election surveys frontrunner Bongbong Marcos has not yet announced any public engagements for today. Coming right up after the break, PLDT posts higher earnings in the first 3 months of the year.
More of that and other stories when Business World Live returns. Stay with us.
watching Businessworld Live here on One News. I'm Jess De Los Santos.
I'm Danny Laurel.
Okay, Dan, it's the battle of the telcos as the duopoly continues to fight it out in network coverage, but not necessarily going in the same direction in terms of spending. Tell us more about that.
Well, just before I dive into that, I do want to just show our viewers here how our index is down by 0.7%. Today is, of course, the last day before Monday's elections where we will have closed markets. So we are at 6818.95. So that election pre-rally is not necessarily happening one last trading day before the markets. Now, as for your question, in terms of PLDT, take a look at that. Down by 13 pesos, but at least up by close to 3% in the past 3 days. This as they did announce that their net income for the first quarter was 9.1 billion pesos. That's up by 57% year on year. And this is on the back of their home fiber-only service revenue up 74% to a record high 11.1 billion pesos. They also have enterprise revenues up by 7%. But the big question is that you mentioned is spending, capital expenditures. That is at the forefront of their strategy. Let's take a listen to their latest guidance.
CapEx at 85. So the ratio of EBITDA to CapEx will be 1.3 times. I think unlike other telcos, we will show for the first time in so many years where EBITDA will be underspending our CapEx below the level of EBITDA at a fairly hefty margin.
There's additional demand that we're seeing. We're in touch with a lot of the hyperscalers and even enterprises, and that demand continues to grow. So we want to make sure that we don't run out of racks. We're able to serve the market.
Okay, Jess, so this, of course, PLDT saying the capex for 2022 will be 85 billion. That's compared to the 76.80 billion plan that they first announced. And this is in contrast to an interview this morning of Globe CEO Ernest Cu on Bloomberg TV in Hong Kong saying that they plan to slow down capital spending. We will look into that further. But also, Jess, while we are at it, the question is in terms of our telcos, how reliable will connection be during election day? Let's take a listen.
The intent is to provide the best possible services and connections in support of the elections. So we're dealing with all of the major parties involved. Our teams are on deck. We're staffing the teams to be able to cover 24/7 so that as much as possible we have uninterrupted services for the elections.
All right, again, our telcos ensuring, of course, that connection is going to remain stable during election day. Again, Dan, ilang araw na lang. Handa na ba tayo?
I know. Grabe, Jess. Are you ready?
We have to be. We have no choice. That's a first look into the business day this Friday, May 6, 2022. Join us again next week at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
Well, of course, from next week, Jess, for those 2 days, Monday and Tuesday, we will have 43-hour continuing coverage of the national elections. And on Tuesday and on Wednesday, Businessworld Live will be back at 9:30 a.m. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.